Hello everyone and welcome to the video market update for Monday, March the 13th, 2017. Okay, on Friday we had the unemployment report and the market really didn't do much. You would think that the report was relatively positive, but we didn't really see a huge reaction in the S&P 500. And one of the reasons is that this rally here has been meteoric since November, and we see a huge move up, and it may be time that the market, yes, some upside will could be on the horizon, but we could see a slight pullback from here to give us some breather. Or what we could also have is a couple of days of sideways price action before the next move in the markets. This morning here, the S&P 500 is down slightly. It's down 1.82 points. The Dow is down 36. The Nasdaq is actually up 9, and the Russell is up 6 points. Let me just reiterate that this, as I said earlier, we are in a situation that if we break below this 2350 level here, this 2350 level, that would break some support in the market, and we could see a move to the downside in the S&P 500. If we close above that 2400 level, that would be actually fairly bullish, and we could see some further gains in the markets. Taking a look at the technical look at the Dow, we see that, as I said, we're down slightly, and if we close below this the level of 2077 or 20,777, that could tell us that we are in for a larger pullback. Now, the main area of support in this market is down at the 19,600 level. If we breach 19,600, that will indicate a much larger pullback in the markets that could take us down to 18,000, into the 18,800, 18,900 handle. Looking at the overseas markets, and the German DAX as of late has been following the S&P 500 and marching higher, but curiously the market has not reached the level or the high that was made back in April of 2015. The DAX this morning is up 2766 at 11,990. The FTSE in London is technically, or looking at the charts, it breached the all-time high that was made, and we cleared significant resistance in the 7,200 level. Let's just pull back to the weekly analysis and the weekly chart, and we see that we close above that all-important 7,100, 7,200 level, and we're currently at 7,343. So that's a relatively positive for the FTSE. Taking a look at the US dollar, we see that US dollar index is unchanged on the morning, and we had a huge move down in the value of the US dollar index on Friday as a result of that employment report. Although it was a good report, the dollar didn't really like it that very much, because the dollar was thinking that we would have a stronger report. And when we didn't see that stronger report, we got a sell-off in the dollar. Now, for the technicians out there and people who follow charts with the dollar, you could see that we could be forming a head and shoulders pattern, and that head and shoulders pattern normally is a topping price action, and that could signal a short that this top that was made in December, early January 2017, is the actual top in the dollar. As you may recall, the dollar has been on an 8-year bull market ever since 2008, and at some point this bull market in the dollar will will end. So the question is, are we at the very top in the dollar? Now, for us to complete this head and shoulders pattern, we need to see the market break below this 9900 level. If we break below 9900, that would be very bearish for the dollar, and that could signal definitely that we are in a short-term topping situation, and that will lead to some opportunities for bearish dollar positions, and we may see, if that happens, we may see an up move in the gold market and some other commodities. As we say gold, let's take a look at gold. It's currently in a holding pattern, with the market backing off of that 1250 level, but for clues as to where we're going next in gold, we need to see this market break out of this. For those of you who are watching this, break out of this triangular situation here. This is a consolidation chart pattern, and if we close to the upside, that would be very bullish for the gold market, especially if we can close above 1350. If we break down and close below this 1130, 1140 region, that would be bearish, and that will then challenge the 1050 level in gold. Okay, so that's essentially what we have today as a broader market view. Looking at the VIX, we're actually the VIX is at 1177, so we're not at the historical lows, but we are fairly low, and we see a lot of complacency in this market, and what we could see is a pullback, and we could see the VIX come up to the 25 level. And the reason why we are going to see a pullback at some point is that's how markets work. At some point, we just can't be going up and up and up and up forever. At the end, when we have these moves to the upside, the psychology behind is that investors tend to get very optimistic and get over exuberant, and they start to see their portfolio moving up. Every stock that they're touching moving up, a sense of invisibility strikes in, and that's when we normally see large market corrections, which can turn that happiness into pain very quickly. The media at this point in time is very bullish on the market. Every story is almost positive, so we have to keep our eye open and expect that we may have to move in more defensive plays if we get a larger correction, which we're due any minute now. Thank you very much for listening, and I hope you have a wonderful day.